Hello again, it's Barry James, and this is the COVID Spring series when we're going to be talking a lot about what happens next, what happens after COVID, what kind of world are we going to build, and actually completely opposite to that. I'm delighted to have with me the winners of the Fairer Finance Hackathon from a company that's called Finexos, and I know that because it's got something to do with an exodus, which we'll talk about no doubt as we go through this. But I'd like you to introduce yourselves, please. But welcome Mark Fisher and Stephen Bone. Mark, would you like to start?
Hi, Barry. Thanks very much for having us on. We're absolutely delighted. This has been a huge few weeks for us, and the amount of support that we've had off the back of it is absolutely fantastic. Great. So I'm CEO of a team, an international team, actually, of people working all over the globe, but the majority of us are based here in the UK. I have Stephen, who's our chairman, and my co-director, who's been instrumental in helping us structure the company and get us out into the market to speak to the right people. So I'll let Stephen introduce himself.
Thank you, Mark.
Just before he does, just tell us just a little bit, just 30 seconds on your background and how you came to get here, and then I'll ask Steve to do the same.
Yeah, I was management consultant for quite a few years. We were tasked with a project. We were looking originally at the absenteeism of the workplace. And the main drivers behind that, as part of the research, we found out that 31% of people in this country were missing their days sick at work because of money and money-related stress.
Wow. We'll get into that in a moment or two. That is such an important statistic. And I guess that was pre-COVID as well.
Pre-COVID, back to 2015, 2016. So you can only imagine now what's happened to the numbers as a result of the pandemic.
Yeah, absolutely. Steve, sorry, please, same, how did you get here?
Barry, nice to meet you. So I'm a private equity guy by background, so 25 years working, in the investment field with a number of companies, looking to grow them and then take them through to IPO or sale. And having worked for other people, I've set up on my own a few years back and have a small portfolio now, companies of which Mark is one, and delighted to be involved with him and enjoying a very exciting journey.
Yeah,
absolutely, and I think a very important one as well. And it's clearly no mistake that you came out at the top of the hackathon, because you've been cheating, haven't you? You've been working on this for years. It's a form of cheating, I suppose, but I'm glad that you have. So Mark, you were just saying that this came originally from work on absenteeism.
Yeah, absenteeism in the workplace. We know people suffer in silence, especially when it's due to money. There's a stigma attached to it as embarrassment, and people seem to go through kind of a phase of silence. And then when things start to unravel due to the cognitive load and the mental impact, unfortunately, then it can end up landing them in serious difficulty, not just with money, but with their jobs. And unfortunately, people are very unwilling to speak about it. So as a result, this normally only really comes out at the end of that process. And it's pretty much too far down the line for people to help at that stage. I just want to jump in there. I mean, look, we've conducted 5 years of research. I mean, I think that's really important. We never intended to enter into this market, Barry, just as another, whatever they are. I don't know, payday lenders are out there. I mean, debt relief agencies, debt collectors. We never wanted to be any of those. So the idea was that we would really get to understand our customer. We do. There's 26.4 million of them out there at the moment. We want to try and help as many people as we can, but we also recognize we can't help everybody. So the work that we've been putting in is how to identify that market. What does the market actually require, and what technology can we bring to the market that can help relieve some of the issues that people are facing right now?
Yeah, just tell us a little bit about that that's UK, 26 million. And again, is that current or is it pre-COVID? And who are these people?
I mean, Barry, look, the Financial Conduct Authority conducted a survey in 2017 called Financial Life Survey. In there, they noted that 20 million bank accounts are already showing some forms of vulnerability. The issues now that as we have as a result of COVID has just exacerbated a problem that was there long before, and that was the subprime credit market, consumerism, access to easy credit, a lower than expected financial literacy rate in the UK, behind that of Latvia and Estonia, for example, at the time when we were studying this. And I just think it created that perfect storm. And we forecasted this 5 years ago. I mean, this is one of the key reasons why we started speaking to banks, because we wanted to let them know, we see a big problem coming here. We're quantifying it for you at the moment, but we don't have the technology to actually put that into a visual for you right now. So that's why we have spent so long actually researching. We didn't jump into the market. We had a lot of advice around this. Indeed, our tech partners, FinServe experts who delivered the M-Pesa algorithm, basically told us we'd done exactly the right thing. We didn't jump in and try to build technology that would have to be forced into a niche. We want the technology to actually fix the problem that we're actually trying to fix right now, which is, high interest debt, low incomes subjected to it, 450 billion pound unsecured debt market, and high interest rates, really super high interest rates. I mean, I was only reading an article recently in the Times where there's still lenders out there charging 1,600% APR.
Amazing. And look, 26 million in the UK and a population of 60 million.
Yeah.
Taking out children, that sounds like pretty much half the population.
Well, it's anybody that's been outside in the last 5 years, Barry, who has bought a consumer credit product, anybody that has credit right now, anybody that's in the situation where we are, where there was a furlough scheme, where people dropped in income, that exposure, that repayment still has to be paid every month. And as a result of that, if there's any drop, we notice there's 16 million people in the UK with no savings whatsoever. There's not enough money there even to see people through 1 month. 1 month, and we've gone through a pandemic right now. We're in the middle of it, and the situation we have is that there are not the support tools that are there are they're a very difficult choice for people to make. An IVA or a bankruptcy is a serious decision to have to make. What's in between that? There doesn't seem to be a whole lot. Of your main bank, if your credit score drops and your bank doesn't want to support you, you're then pushed into a situation where you've got to deal with subprime lenders. Those lenders, they serve a purpose. There's nobody else lending in that space, so that money is needed there. However, on rates at 1,600% APR, we are only asking for more trouble. Yeah,
and it's coming. Unfortunately, the reason I asked the question is really that it chimes completely with other projects, things we're seeing in other areas where we think that roughly half the population is either in the poverty trap, and probably a lot more are living in the shadow of it. As you say, a payday or two away. And these are startling things. And the implications, I think you alluded to them when we spoke earlier. Mark, what are the implications for this? And I know you saw it through the lens of absenteeism initially, but just talk us through what that means.
I mean, look, identifying people within a banking database anonymously for a start, if that was the starting point that we looked at, a lot of people are not aware that they're in a situation that could spiral out of control very quickly. The lack of savings is probably one of the key areas of concern. Then when we start to look at the types of credit products that people are utilizing, when they're using them, how many, different lines of credit that they're utilizing, that's where it starts to become really scary here, because there's obviously an income gap. We had a long period of time throughout the last 10 years where income was pretty much steady. There wasn't any increase, but the cost of living kept increasing. The inflation rate was increasing. Then it leveled out again and took a little bit of relief into the market.
Yeah. So let me just come in on that for a second. And I want to come back onto the cognitive load and the emotional load and the effect of that in a moment. But we've been doing quite a lot of research on this. I interviewed a chap called Les Leopold, who's done very extensive research and found that real incomes in the Western world have been static or falling for 40 years.
Yeah.
for 40 years.
Yeah.
And we also came to this, we did a lot of research, my team and I, for something called Beyond Rent, when we realized that people can't get on the property ladder because they can't save.
Yeah.
Why is that? Because rents are rising to absorb all the available income that could otherwise go on holiday or savings. So the opportunity to have those savings is almost non-existent, we think, and that seems to chime with what you're saying.
It's a really good point, Barry, because if you look at traditional credit scoring, and I know it's sort of changed recently, but rental payments were not taken into account in terms of calculating a credit score. If you are someone that's been renting for, let's pick a number, 10 years, and you have paid your rent on time every month for that period of time, surely that's an indication that you are a good credit risk. So that lack of savings, may not be necessarily a barrier to getting someone on the property market if lenders were to look at you in a slightly different way. And part of the work that we're doing is to look at your management of cash flow and relate that to your ability to manage credit and to make you a better credit risk by taking into account a vast number of factors which aren't currently looked at by the likes of Experian.
Yeah, it's an extremely good thing and a good point. I guess, where we started with the hackathon was looking at the trip points and the unfairness in kind of the ways that you referred to. I'm a good payer. I've always paid my rent on time and so on, and not being treated fairly, but needed more because of that macroeconomic position that we're in, that we need to do something about, hence the book I'm writing. I'm not going to go onto that right now, but
it's always good to get a plug in, Barry.
Yeah.
Well, it's called Humane Economics since you asked for it, but there you go. But the reason I'm mentioning it is I want to come back to, you've got a lot of information and experience with what this does to people, how that works in terms of their ability to function and to work and so on. Would you just pick that up again, please?
Yeah, I can, Barry. In a different role, and it was prior to actually getting into the main project, I actually sat with hundreds of people at the kitchen table in the evenings, going through financial plans. And the surprise would be that you'd walk up to a house, beautiful 500,000 pound house, 2 new cars on the drive. And then when you sit down to actually discuss finances with people, you find out then that they're topped up on mortgages. The cars are leased. So normally, and in fairness, I have to say this, normally the wife would be the person shopping around for a zero interest balance transfer rate. So she's moving the cards around every month to try and keep the cost of credit down and the interest payments down. But eventually that runs out. Now, just imagine the cognitive load of trying to manage all of that, just yourself with a piece of paper, or maybe even on a basic level, a spreadsheet. The amount of discipline that you would require, and not to miss one payment or miss one time, or for fear of your credit rating being impacted as a result of that. Well, that's what tens of thousands of people are actually going through right now. As we're speaking at this time of the day, there's somebody actually sitting down to do this.
Yeah.
So our understanding of it was, look, to give people a chance, you need to reduce the cognitive load. We can use technology to do most of that right now. So the calculations, setting up the payments, when it should go out, how much, allow us to try and take some of that weight from you. In the meantime, we're going to be plugging you a little educational pieces to get you thinking about why it would be a good idea for you to do this. Yeah. And then it's always an opt-in process. We're not going to tell you to do this. This is entirely a decision that you're going to have to make on your behalf if you want to exit out of the situation, hence the name Finexos, financial exodus. So we're here. That's where it comes from. As everything is, we put a lot of thought into everything, Barry. So the whole idea here is that we go to a person comes to us and says, so Mark, I have all of these issues here. Great. We use open banking to collect that information, open finance soon to be. We pull in everything in front of us, first of all. We can then start to separate that out into little boxes for you so that you can absorb one thing at a time. We will put a plan together for you. If that plan suits your needs, you opt in, and we will do our very best not only to help you manage that situation, but to walk you through it. It's a very lonely space. It's very stressful, and you don't want to speak to somebody else about it at times. It's embarrassing for a lot of people. We're hoping to remove the stigma of embarrassment to something better, to say, I'm actually taking control of this situation now, and I'm back in power, as opposed to the credit having the power over me the whole time.
Shame, the word shame is really important here, in that I've been looking at some of the works of an American psychologist, a chap called Keith Payne, who's looked at this and the way it isolates people. That, you know, it's we know from the conversation we're having right now that they're probably, you know, half the other people in the room with you are probably in a similar or the same boat. Yet we kind of feel, you know, shamed by this, and that's got to change too.
Yeah.
But you know, so tell us about the solution, how you kind of got from recognizing the need, here.
So as part of the hackathon, when we saw this with the data and the research that we have in the background, and then when we looked at what was required, I mean, you know, the whole account structure of how a bank account should actually work for you, it doesn't work. It's just a money in, money out thing. For a lot of people who actually don't know how to even read a bank statement here in the UK, it's very difficult to actually just see numbers dropping in and out. They don't really mean anything to you until the last day of the month, when it's either a minus or there's nothing there whatsoever. Yeah. So the very first step in this is, look, the account is more interactive that we're looking at. It's designed to allow you to move payments to and from, secure payments, prioritize so that you don't miss a payment. You can rely on the machine to actually do it on your behalf if things are just too stressful right now. Yeah. And I'm putting this in very simple layman's terms. I'm just thinking of the ordinary person looking at this. I haven't got the brain space to deal with this today, so I'm going to allow Viola, which is our financial intelligence online assistant, to actually go and do that on my behalf until such time as I feel I have the cognitive ability to be able to come back and actually spend an extra bit of time in terms of making more decisions. So the first thing it does is it segregates your income. It puts the priority payments, your rent, your council tax, your mortgage, anything that you could be sued for, it puts it to one side. And we're saying prioritize that, please. That's really important. Do not miss that. The second thing we want you to do is actually get used to planning and budgeting for yourself as well, because it's difficult for people who just tap the card on the machine every day to actually envisage having to put certain money into an envelope or a glass jar situation. We're going to automate that for them as well. Then what we want to be able to do is say, right, you're doing fantastic here. Here's a little tool that you can use to track your daily expenditure. Not just from the point of what you're spending, but how well you're managing your cash. Because if you're left with a positive balance at the end of each day, you definitely are achieving what you set out to do, right? And it's about communicating that information back to the customer and empowering them. And you know, you've done a good job. It's not a condescending thing. Well done. You know, the idea is that we tell you, you have actually done a great job. Now let us reward you for that. Yeah. So there are a number of features in there, Barry, that will reward them afterwards.
Yeah. So look, confession here, you know, my first job was with a bank, and I'm doing penance, as you know. So I had a bank account from even before that, in fact. But I am old enough to remember when pay packets were a thing. Yeah. You know, and people would take money home, and you know, mother would have a pot for the rent and a pot for this and a pot for that. And that was intuitive.
That's exactly where we come from. So Mark and I come from very similar working class backgrounds. And it was always the matriarch in the family who controlled the purse strings.
That's right.
So she'd have a pot for the milkman, and a pot for the rent guy. And that's very much formulated our thinking, which is we want to get back to helping people plan those pots. Jam jars. That's where the money was kept, in the jam jar, and everyone knew where it was, and that's what it was being used for. And if we can get people going back to actually, can we plan properly? Can we put in place technology that can replace that individual jam jar? We're going to help change behavior and help people, you know, in terms of social and financial mobility, you know, move forward in changes.
Hugely.
It's only kind of more recently that I've looked back and realized how unintuitive and really unhelpful the standard bank account we've all kind of grown to love and hate, to know and hate, I should say, is. It's not intuitive at all. It's not particularly helpful. So look, let's, you know, I think this is a leap forward, isn't it?
I think so, Barry. Look, not to put this down. Look, if you, I remember the days where you used to get the little brown envelope, as you mentioned earlier on. When you had real cash in your hand, you looked after it a lot better than you do when it's just a series of numbers on a screen somewhere. It's trying to rebuild that relationship with the fact that, look, I don't need to buy something on credit over 4 weeks now. If I save for 4 weeks, I own it. Do you see? This is the mentality that's the way when our banks, when our pay packets all went digital, you know, access to credit became so much easier. It dumbed us down to a point that allows us to fall into a trap. You know, without being controversial about that, but the reality of it is, it makes it far quicker for us to make a decision.
Well, actually, no need for controversy on that point, or at least I don't think so. In that, you know, there was a sort of stage there for about 10 years when we were offered a safety net. You know, we were offered pretty much as much credit as they could sell us.
Yeah.
And we could use that to go beyond the 0 point. When that gets withdrawn, we all know that there's a spiral there waiting for us. And this is what the hackathon was about and why we're here.
Well, if you just take a further step backwards and say that easy access to credit combined with zero financial education for the vast majority of people is a toxic combination. And like you say, when those lines get turned off, or when people don't have access to, you know, something which is affordable, well, guess what? That's where the likes of Wonga stepped in and, you know, had hundreds of thousands of people accessing loans at, you know, 4-digit figure interest rates. You know, the vast majority of people would not understand what that really was. So, you know, we're looking to try and break that cycle, to provide that education at the front end so people understand what an APR is. You'd be amazed how many people just don't understand that. Absolutely. And try and break that reliance on a credit cycle with better behaviors.
Absolutely. So where are we now, and what's next, and where are we going? I mean,
so Barry,
I'm including me in here.
This is the exciting bit. Yeah, I mean, look, this is the thing that keeps me up at night. To be fair, it's brilliant. So as we explained, we have an international team of people working on this project with us. We've got a huge amount of experience. That is all now being pumped into the development of the MVP. And we're really looking forward to having that with us shortly in the new year. Sorry, my camera popped off there for a second. Yeah, but we're looking forward to that launch early Q1 in the new year. And really what that will do is that will start to give us the information that is required to populate the two support apps that we're going to be launching. There will be 2 different apps for different people that want different options. That's perfectly fine. One that will provide a semi-automated version for them where they still want a lot of control in the account. Brilliant. And we want to keep people in that space. But for the people who feel that they really need some extra support, we'll have a fully automated version of that released in Q2 next year. I suppose the big question here is, Barry, is that when you were talking earlier on about the cost of living, we've already identified that the cost of credit is actually the problem, not the cost of living for these people. We know that there are up to savings of up to 50% on their credit repayments every month. And when we calculated this, and when we were looking back at a stimulus package as we came to talk about it, you know, if we can take those household payments from £500 a month to £250 a month, and exit those consumers out on a much safer basis with no effect on their credit rating, other than it's going to go up, that £250 a month back into the household is real cash that people can now put aside to save. They don't need credit anymore. Our aim is to exit them out of credit. When they do need credit, they've got a far better appreciation of what it actually is and what can actually happen if they take on too much of that credit. So that's what we're, in a nutshell. Those two things are going to be delivered next year. We will be delivering our free financial health check app out into the marketplace for anybody to use. And following that, then we will launch in with the 2 apps that will then support those consumers to help them through the next 6 months. And at that stage, then we have lots of options in the market. Not least of all, but there may be a lending option there as well to help people consolidate some of that higher interest debt, with a view to exiting them out over a 5 or 7 year period, something along those lines. I am being a little bit vague for obvious purposes. We don't know yet, but if we were able to reduce the cost of credit for households by 50%, we would definitely be looking to enter the market on that basis.
Okay, great. And will this work with any bank account or just selected ones?
The wallets that we're developing can work with any bank account. We will also be providing our own wallet and card. So as I say, there are 2 different services for different people. Depending on what they feel is their skill level, they can always transfer back over onto a wallet only option if they like. So there's lots of freedom for them to actually make different decisions at different times when it might be relevant to them.
Fantastic. Okay, well, I can't wait. I want to get my fingers on this as soon as possible. I'll be talking to you, later about that. But before we close off the interview, please, fill us in on anything else we need to know. But also, and ask you, Steve, first, if there's one thing that one thought or idea or bit of information that you'd like to leave for listeners, if there's one thing they should remember, what would it be? And
it's a great question. I think change only comes about when you have passion and a vision. And Mark has delivered that in spades. And what we've done is to surround him with a team of world-class experts to tackle this problem of social and financial mobility. And if in a small way we can help just one person, we feel that we will have all achieved something really great here. Our aim is to help millions of people, not only in the UK, but across the world, by providing them with the tools to manage their money better and take away, as we talked about earlier, that cognitive load. So, I'm hugely proud to be part of the team. Mark has delivered a fantastic solution here. Making that reality has been, a lot of effort from a lot of great people. And I'd just like to thank them on this forum for all of their fantastic efforts over the last few years.
Yeah, and I'd also like to thank all of the other participants, by the way, in the hackathon. They weren't as skillful or fortunate or both as you both, but they all contributed. And I must say, before I ask you, Mark, to answer the same question, that anything that can be done, certainly anything substantial that can be done to tackle that emotional and cognitive load that brings stress and brings ill health. I think it's the head or the president of the Royal College of Psychiatrists has said only in this last week that they know we are faced now with a tsunami of mental health issues because of the scenario we're in. So, applause and plaudits for being here and doing this. But Mark, what's the one thing you like to leave with
Barry? I'd really love to send a message to the people out there that are suffering in this situation right now. The people that feel they can't speak to anybody about it. The people who are really at that level of stress that they think it's not worth it anymore. Well, let me tell you, it is worth it. We have spent the last 5 years, as Stephen has said, pulling people from around the globe together to try and come and put the best brains into the situation now that we can to try and crack this nut. And I believe we have. So hang on in there. We are not, we're only a few months away from the marketplace now. And I really want to be able to say to lots of those people when I read their messages, and I hope I will, that people, we've really helped them. I'm looking forward to reading your message.
Great. So I guess people can find you by Googling Finexos. It's Finexos.
Yeah.
Dot
Co.uk.
co.uk. Great. So it only remains for me to say how pleased I am to be having this conversation and to seeing this development. I'm so glad, and I can't wait to see the outcome. But for now, Mark Fisher, Steve Bone, Finexos, thank you so much.
Thank you.